let's talk about a company that could either become the next trillion-dollar giant or a really spectacular failure. Today, we're diving deep into IonQ, a company right at the bleeding edge of the quantum computing revolution. We're going to break down a detailed investment analysis to figure out if this is a once-in-a-generation opportunity or just a massive gamble.
So this is the big question, right? Is quantum computing the next massive tech revolution that's going to change everything? Or are we just looking at another bubble that's waiting to pop? The analysis we're about to walk through lays out both sides of that very high-stakes coin. Let's get into it.
So here's how we're going to break it all down. We'll start with the bull case, all the reasons to be excited and its three main pillars. Then we'll flip it and look at the bear case with its two pretty huge risks. After that, we'll check out what's on the horizon and we'll wrap up with the analyst's final call.
Okay, so what is all the hype about? What's really fueling all this optimism around IonQ? Well, the bull case really comes down to three key pillars. And the first one, well, it's something you can see clear as day in their financials. Absolutely explosive growth.
The first pillar here is all about financial momentum. So let's just look at the numbers. Back in fiscal year 2022, IonQ pulled in about $11.1 million in revenue. A solid start for a company in this space.
But this is where things get really interesting. Just 1 year later, in 2023, their revenue almost doubled to $22 million. That's a 98% jump. I mean, that is the kind of insane growth that makes investors really sit up and pay attention.
And that momentum just kept on rolling, hitting $43.1 million in 2024. That is another 95% leap. So we're not just talking about a one-time fluke here. This shows a real pattern of accelerating adoption of their technology.
Okay, now let's zoom out and look at the bigger picture. The first thing you're going to see is that huge net loss. I mean, they're burning hundreds of millions of dollars. But here's the thing, that's on purpose. They are in an all-out sprint to win this quantum race. The number you really need to look at here is the gross margin. At over 54%, it tells us that their core service, the thing they actually sell, is profitable. This isn't just growth for growth's sake. There's a really solid business model under the hood.
So you're probably wondering, how are they funding this crazy burn rate? They're doing it with what the analysis calls a fortress balance sheet. After a massive funding round, IonQ is sitting on a projected cash pile of about $1.6 billion, and they have almost zero debt. That gives them something like a 10-year runway to just focus on R&D without having to worry about what the market is doing day to day.
Now, onto this second pillar, the technology itself. This is the real secret sauce. IonQ uses an approach called trap-to-ion, and as you can see from this little comparison, it has some pretty major advantages over the superconducting method that rivals like Google and IBM are using. Because they use actual identical atoms as their qubits, they get fewer errors and more stability. And here's the real kicker. Their machines can run at room temperature. That could be a massive, massive cost advantage down the line.
And that brings us to the third pillar, which is their just brilliant business model. Instead of trying to go head-to-head with the tech giants, IonQ decided to basically become the Switzerland of quantum. They made their hardware available on every single major cloud platform. Amazon, Microsoft, Google, you name it. They turned their biggest potential competitors into their most powerful sales channels. It's an absolute masterstroke of a strategy.
Okay, so that's a pretty compelling case for IonQ, right? But look, this is a high-stakes game, and the risks are every bit as big as the potential rewards. So now we've got to flip the coin and take a hard look at the bear case.
The first risk, well, it can pretty much be summed up by this one single staggering number. A price-to-sales ratio of around 382. This valuation is completely disconnected from any traditional metric. It's priced for absolute, flawless perfection.
Now, to be fair, this isn't just an IonQ thing. As you can see, the entire pure-play quantum sector is trading at these just astronomical multiples. Investors are not valuing these companies on what they're selling today. They're placing bets on who's going to own a revolutionary new market in the future. But what it means for right now is that the stock is incredibly sensitive to any shift in sentiment.
And all this creates a really confusing picture for investors. On the one hand, you've got insiders who are selling off a lot of their stock, which is, usually not a great sign. But on the other hand, you've got some of the biggest names in finance, the so-called smart money like Morgan Stanley and Vanguard, and they are buying up millions and millions of shares. It's a total classic case of conflicting signals.
The second huge risk is what the analysis calls the execution gauntlet. And to put it simply, actually building what they've promised to build is an engineering challenge on a scale we've almost never seen before. They're going up against tech giants with basically bottomless pockets, and because their entire roadmap is public, every single little delay or slip-up is going to get torn apart by the market. The pressure on them is just immense.
So you've got this balance of massive potential on one side and these towering risks on the other. What does the analysis say we should actually be watching for? What are the key milestones that are going to prove whether the bulls or the bears have it right?
In the very near term, like the next year, year and a half, the key is just watching if they can hit their technical roadmap goals and if they can land any big new contracts. Looking a bit further out, the real game changer would be the demonstration of photonic interconnects. That's the tech that would let them link multiple quantum computers together into a network. And the long-term goals are even more ambitious, creating stable, error-corrected qubits by 2028 and finally actually hitting profitability by 2030.
All right, let's move to our final section. Let's see how all of this, the good, the bad, the risky, builds to the final verdict from the analysis.
The analysis really just boils it all down to this. This is the quintessential high-risk, high-reward opportunity. The valuation leaves absolutely zero margin for error. But the company is, by a lot of different metrics, the current frontrunner in what could be a truly world-changing industry.
And this quote from the analysis really nails it. It describes the investment as having an asymmetric risk/reward profile. So what does that mean? It means the potential gains if they actually succeed could be exponentially larger than the amount you'd lose if they fail. It's a bet where the upside is just potentially enormous. So here's the bottom line. The analyst's final verdict is a buy. But, and this is a huge but, it comes with very specific conditions. This is for investors with a long-term, 5+ year time frame, and a stomach for some pretty extreme ups and downs. This is absolutely not a stock for the faint of heart. Which leaves us with the ultimate question, doesn't it? The technology itself promises to completely reshape everything from medicine and finance to AI. And this analysis suggests that IonQ currently has the pole position in that race. So the question you have to ask yourself is, are they the ones who are actually going to cross the finish line?